So you're buying a home, you got to make some decisions about insurance. So there's some insurances that are necessary and some that you can elect to take. So we're going to go over the necessary insurances as part of the home buying process. Number one, you're going to need homeowners insurance. This is insurance that protects the property, fire, damage, stuff like this. So this is your regular property insurance. The other insurance you're going to get is title insurance. There's two parts of that. There is lender's title insurance, which you will be required to have if you have a mortgage, and then owner's title insurance, which you could say you didn't want, but I could not emphasize more how important owner's title insurance is. I have seen it from some really good friends of mine who had false claims put against their house and they had to go fight it in court without title insurance. So what owner's title does is title is the history of ownership in the home, and it protects against claims against that, right or wrong. So if somebody says, hey, that person didn't have the right to buy that house, that was mine, there will be an attorney provided to you from the owner's title insurance that can go fight that with you and false claims as well. So super important. And then also mortgage insurance. So mortgage insurance is an insurance that protects the lender if you put less than 20% down, and you get to pay for it. So you may not be required to have mortgage insurance because there's a couple of loans where we don't structure it that way, but there's also, you might have 20% down, and if you have a 20% equity position, it's not required. But those are the three main insurances you're going to see. So it's important for you to understand the nuances between those three as you move along in the home buying process. Now, secondary to that, there's three other insurances: employment insurance, disability insurance, life insurance, that you might want to consider. So you're buying a house, you're getting an asset. It's really important to protect your assets as well. So when we think about why would your asset be at risk? It would be an inability to pay the mortgage back, and then the lien holder executes their lien and forecloses. Obviously, that's not great. So employment insurance, if you're in a field where you're worried where that might be something, we don't see it often, almost super rarely, honestly. But I would also push like disability is a common thing. You get in a car accident and you don't have any way to pay the mortgage. You get some sort of permanent disability, and what you get from the government might not be enough. So having something to supplement that so that you can still continue to live your life and have enough money for these things. And then also life insurance, God forbid somebody that bought the house with you were in a position where they lost their life. But if that person, if you're in a joint income household and that you lost half, if not more, of your total income, and you don't want to have to sell your house and move and find another place to live, it would be a really great idea for you to have enough life insurance at a minimum to be able to cover the mortgage and some other living expenses. So that's something we would consult on completely separately. I would connect you with financial professionals that do those things, that provide those services, if that was information you were interested in. But it was important for me to make sure you understand the insurances that you're going to be required to have and some other insurances that would be a good idea for you to have. Any other questions on insurance, hit us up. We'll talk anytime.